In this video, we'll show some fairly substantial and hard evidence that continues to favor the bullish case for stocks and risk assets in general. We'll review Demark charts for Italy and the S&P 500, several long-term last time this happened charts. Stocks went up. Bullish head and shoulders patterns, some of which have not completed yet or hit their targets. Some of them have hit targets. Numerous bullish breakouts on daily and weekly charts. We'd like to see those hold. Bias is bullish, but we must remain flexible. Quickly, some key dates that we reviewed recently. August 31st and September 6th tended to side with the bulls. We've got September 12th and 13th to look forward to. You can find more information or updates on our blog or on our YouTube channel. The charts are still bullish, will remain bullish as long as the windsock is moving in this direction. We're happy to change if it flips back towards debt and deflation. You can use this icon in the lower right-hand corner of your video player to view in full screen mode. This icon allows you to improve the image quality and clarity of the charts. This is a daily Demark chart for the ticker symbol EWI, Italian stocks. Demark charts and indicators are proprietary tools from Market Studies LLC. You may say, I don't plan to invest in Italy. Why do I care? Well, if Italy can stabilize and there are bullish readings on Demark and traditional charts for EWI or the Italian stock market, it's probably good for risk assets in general, stocks, commodities, precious metals. Therefore, we are looking at Italy and believe that it can help all investors potentially. There's a lot going on here, looks complex, not too difficult. In Demark speak, a 9 and a 13 signals potential trend exhaustion. You can see the 13 here was a good signal, weakness followed. Here we can see that not all 9 and 13s hold, although this 13 did help you potentially see these gains. Here we have a 9 and a 13 on a daily chart, so this 13 here signaled potential trend exhaustion here. We basically ran out of sellers. The market has responded to that. This here is a TDST line. The reason for showing this is this line is bold. Previously it wasn't as bold as it appears now. The bold line tells us that this is a qualified bullish break above this TDST high. And in Demark speak, this signals a potential change in trend from a downtrend to an uptrend. The mirror image of that occurred here. Here's a bearish break, and EWI, after this bearish break, did not perform well for the rest of May, all of June, and the majority of July. So this qualified break here was a good signal. This 13 was a good signal. Now we have a 13 the other direction, signaling potential bullish outcomes, and we also have this here. It's also important that we don't have a 9 yet. We're only at a 4 count today. What typically you'll find is when you get a qualified bullish break, the probability of us carrying at least to a 9 and possibly even all the way out to a 9 and a 13 increases given the big picture here. Now let's shift gears and look at the weekly chart. We're still looking at EWI. Now on the weekly chart we have a 9. This is a 13 here that's somewhat difficult to see, and a 9. And this actually qualifies as something known as a 9-13-9. And why that is the 13 was completed prior to the 9 here. So this is potentially a bullish setup on the weekly chart of EWI. This is your Demark risk level or your stop loss, quote unquote, for the 9 and the 13. You can see price came down intra-week, but then held. So typically that's a good sign. We also have a 6 count here, implying that if we made it to a 9 count, we could see at least 3 more weeks of gains. This here is a propulsion level, this green level. It's also a good sign that we're above it. We'd like to see a close above it on Friday. This chart here is as of Thursday's close, what this propulsion target tells you is when price moves above the green line here, the probability of making it to this upside target here at 1533 is greater relative to the probability of moving down towards 826. Net bottom line, we'd like to see EWI close on Friday above 1227. This is a daily Demark chart for the S&P 500 index. Quickly, here, qualified bullish break. In Demark speak, the trend is up. Here was your count, the peak in April, a 9 and a 13, excellent signal. If we were to get to a 13 again, we would need at least 9 additional trading sessions for this count to get to a 13. From a negative perspective, we do have a propulsion target not that far away at 1440. This is a weekly Demark chart for the S&P 500. Just a few comments here. We also have, as of Thursday's close, may not hold into Friday's close. As of Thursday's close, we have a qualified bullish break of this TDST line here, which sits at 1415 and change. All things being equal, that's bullish to see that on a weekly chart. From a bearish perspective, we did hit 1426 and change, which was a propulsion target on the upside. You can see here it is possible to hit a propulsion target and plow through it. From a count perspective, the sequential count, 913 here, was a fairly good signal, at least from a weekly perspective. Sequential count is at a 9.4. We would have 9 more weeks to get to a 13 at least. And for the combo count to get to a 13, we would have to have at least 7 weeks of gains. Don't necessarily need a 13 to reverse. You can see sometimes the 9s in and of themselves appear before reversals. Now we'll shift gears to some traditional charts created on stockcharts.com. This is the New York Stock Exchange Composite Index. This is a weekly chart. These are moving averages here, long-term moving averages. The blue one is the 50-week and the 200-week. Concepts here are simple. It's bullish when the slopes of these moving averages are moving up. That's a bullish slope. Here was the point where the red and the blue turned up simultaneously. Stocks gained 45% after that point. Here and here is when they turned down simultaneously. Bad things happened. Here, there's no other way to interpret this. It's bullish as long as this stays. The slope of this is turning up, and the slope of this is turning up, which would be similar to this point here where gains followed. Same concept here on the weekly chart of the equal weight RSP ETF. Slope of the 50-week turns up, good things happen. Slope of the 50-week turns down, bad things tend to happen. Turns up, good things. Down, bad things. Up, good things. The slope here is clearly turning up in a bullish manner, similar to this point here, here, and here, where gains in the stock market followed. As long as this chart looks like this, the odds favor higher highs in stocks. This is a noisy looking chart that we've explained on our blog Short Takes several times and in previous videos. We'll try to move through this relatively quickly. This is the ratio of the stock market to intermediate term treasury bonds. Think of it as the ratio of risk on to risk off. When the ratio is rising, stocks are outperforming bonds. When the ratio is falling, we're in risk off mode and bonds are outperforming stocks. Takeaways here. Resistance coincided with a peak in the stock market. Resistance coincided with a peak in the stock market. Similar resistance here made us a little bit nervous. We took some profits in this area. We did see some weakness that followed. But now the stock market here has made a higher high. This is the S&P 500. Notice that's different from here. From here, no higher high. From here, no higher high. This could be breaking that pattern. You can see the ratio here today on Thursday is trying to break out in a bullish manner. The longer we can stay in this white space here, the better it is for risk assets. Now, we also know that you can get false breakouts and reversals, so we still have to keep an open mind as of the close on Thursday, but right now this chart looks pretty good. This is a weekly chart of the S&P 500 going back to 2005. These are manually drawn trend lines, so you have to understand what your bias is. The easy way to determine what your bias is, if you're long, you have a bullish bias, and if you're short, you have a bearish bias. I am long and I've been long, so my bias is bullish. It's a long-term downward sloping trend line here from the peak in October of 2007, acted as resistance roughly here, here, and here. In early 2012, we get a bullish break of that downward sloping trend line, and we came back down and tested it earlier in the summer in 2012. So the fact that we held here tends to confirm this bullish break here. This line here, thin blue line, and this thin blue line here, you can think of this as a symmetrical triangle. I'm drawing the triangle now with the cursor. The way a symmetrical triangle works, it tends to be a continuation pattern, which means we were moving in a bullish manner when we broke out. We tend to stay bullish. One way that you can project a target is to use this line here at the breakout. If we were to move that high, it says we could go quite a bit higher. Not saying that's what's going to happen, just keeping an open mind. These red channels here are somewhat like the Bollinger Bands. Markets tend to move in channels. They tend to come with an upper band and a lower band. The point here with these red trend lines and trend channels, when we were at the bottom of the trend channel in 2010, we made it to the top of the trend channel here. Bottom of the trend channel here, eventually we made it to the top of the trend channel. If that pattern were to continue, we were at the bottom of the trend channel here at support, with white space here that would potentially be filled with the stock market moving towards 1550. Again, not a projection, not a target, just an observation of some patterns. This chart tends to lean bullish. We described this chart in detail last week. You can find the video here on the Shavako Capital channel. Just a couple of quick points. Head and shoulders pattern seems to be holding in a bullish manner. We're moving away from it in a bullish manner. RSI on the weekly Russell 2000 small cap as of Thursday's closes at 62 here, which also tends to lean bullish. Here's a chart that we featured, I'm guessing in early August, late July. This is VEU, the Vanguard All World Index. Sans the United States. Head and shoulders pattern, bullish breakout. The point of showing it, this red line here is the neckline. We came back, appears that we held at the neckline, which is a logical place to retest, and we are now moving higher. The head and shoulders target would literally be off this chart if we were to reach it in the coming days and weeks. You can find a video on the Shavako Capital channel that features numerous weekly divergences that we presented in either very late May or early June. This is EWP, the Spanish ETF weekly. Price is making a clear lower low here. The indicator MACD is making a higher low. That's a bullish divergence, foreshadowing this bullish move in EWP. This divergence here just said pay attention in this area here. This is another chart we've featured in the past as being potentially bullish. This is the XLP Consumer Staples ETF relative to the S&P 500. When this ratio is rising, risk off or consumer staples is outperforming the stock market. This would be risk on, risk off, risk on, etc. Purpose of showing it, in the past, when the ratio has been above this 22-week moving average and then breaks through it on a weekly basis, this is the S&P 500, gains in the stock market followed. Above it, breaks through it, gains followed. Above it, breaks through it, gains followed in the stock market. As of Thursday's close, this point here looks similar to this point here, here, and here, where gains in stocks followed. This is a weekly chart of TLT, Treasury ETF, that we've shown 3 or 4 times in the past. This chart goes all the way back to 2003. This is a rising bullish trend channel. Here at the top of the channel, TLT dropped 22% in 5 months. We're at the top of the channel now, showing weakness. we mentioned weeks ago, probably somewhere in this period. Here, this is a bearish divergence. TLT is making a higher high. MACD histogram is making a lower high. TLT appears to be rolling over in a bearish manner. A lot of white space in this chart here. As of Thursday's close on September 6th, TLT was down 2.44% during the week. More importantly is how we close on Friday, but this chart also leans bearish for bonds and potentially bullish for stocks. If you find these videos helpful, we would appreciate it if you would share a link to the page that you're on now. To do that, take your cursor, left click, drag over the address, then hit Control-C on your keyboard to copy. Then move to the document or email that you would like to paste the link into, click on it, and hit Control-V to paste the link. This is another risk-on relative to risk-off chart that we've featured in the past few weeks or months. Looks complex, very easy to follow. This is a Bollinger Band here, these blue lines, these three blue lines. This is the ratio of the S&P 500 to TLT or Treasury bonds. Risk off is in favor here, risk on, risk off, risk on, etc. What we noted in the past was when the bottom Bollinger Band turned up, as it is here, and the ratio crossed the center line, gains in the stock market tended to follow. Cross the center line here, it's turned up, gains followed. Turns up, cross the center line, gains followed. Here we've got a little scare here, but we did hold at the center line, and now we're moving higher. This chart, as it sits now on Thursday night, is bullish. What matters is where it closes on Friday. We also still have a concern with this pattern of a gain, a shorter run of gains, and a shorter run of gains in terms of duration. If that pattern were to continue, we could top relatively soon. But right now, it looks like this chart has got some room to run as long as it holds. This series of charts that follow tend to show breakouts, like this bullish breakout here on the NASDAQ Composite on a daily chart. Bullish break, tested the break, seems like we've passed. ADX here looks bullish, green above red, bullish, green above black, bullish, black trying to turn up, bullish. Longer this looks like this, the better. EFA weekly trying to complete a bullish breakout from this downward sloping trend line from the spring of 2011. Similar situation, Dow Jones Industrial Average, bullish break, tested it, moving higher. Momentum, Williams percent R on the daily chart. This is a good sign that we're back above negative 20. You still have a sleepy ADX here. Green above red. If this turns up and green stays above red, we could get a strong move, much like this strong bearish move here. It's a New York Stock Exchange Composite weekly, trying to complete a breakout, bullish breakout here on a weekly chart. This is a simpler version of the Russell Small Cap Index. This is a weekly chart. You can see also here we're trying to break out in a bullish manner, acted as resistance. RSI on a weekly chart has also broken out. That tends to be a good sign. Also held here, which tends to look more like a bull market rather than a bear market. Bearish markets typically don't make weekly closing highs, which is what we had here in early August. This close is above this close here on a weekly basis. Looks like we came back and tested this bullish breakout here, and for now it looks like we passed the test, with this chart also leaning bullish weekly S&P 500. Looking again here at VEU, All World Index, sans the United States, this is a daily chart. The point is, lots of noise down here, which could be potential resistance, which is now acting as support potentially if we come back down. Price is above all these moving averages. You can't see it here, but the 20-day is trying to turn up in a bullish manner as it did here and here. All things being equal, price in this area is a good thing. It's a weekly version of VEU that we've shown several times. Here you can see the 22-week moving average is flattening out, which is similar to this period here. We'd like to see the 22-week turn up. Obviously, we have a bullish breakout here. MACD on this weekly chart also, as of Thursday, is ticking up, which is a good sign. This cross of the center line is also a good sign. And ADX, you've got red over green, which leans bullish, but this shows you that the bearish trend is weakening. This is a weekly chart of EFA that I believe we featured in early June, pointing out that this was a good sign here with MACD. Also, you can see here it appears in a weekly chart that we broke out, tested the breakout, and are now moving higher. This is the ratio of the Euro Stoxx 50 index to the S&P 500, or FEZ, relative to the S&P or SPY. Point of the exercise, the ratio ran into resistance in this area here, resistance here. As of Thursday's close, we appear to be breaking above it. You can see how fast we fell from here to here. Sometimes you have a tendency to move in a rapid manner to fill this area here, which is just one possibility, which leans bullish for the Euro Stoxx 50 index. Just revisiting a chart here on silver that we showed as a potentially bullish setup. RSI can be helpful. Resistance, resistance. This is where we pointed out here in late July that this was a bullish break. You can see SLV, which we own, has done extremely well. This is a weekly chart of SLV, the silver ETF. Green above red, bullish for weekly ADX. This is potentially flattening out. We'd like to see it turn up. Even though silver or SLV's moved a long way, we do have a bullish breakout here, and it's possible that we could move towards this trend line here before a correction. But as with all charts in the markets, we have to keep an open mind. Again, revisiting risk on relative to risk off, S&P 500 divided by IEF. We've talked about this chart in the past. The point we want to make, MACD as of Thursday's close here is ticking up, which is a good sign for risk relative to risk off. Same chart as we noted in the past. When RSI on this weekly chart is above 50, stocks tend to do well. We're still above 50 now at 57, which is a good sign for risk assets as long as it holds. Same chart, just an update. Good things tend to happen when the slope, this is the S&P 500, moves above the center line. Stocks did well. We're still above the center line. The present day looks similar to this period and this period, where stocks did well. The potentially bullish developments that we noted in the past on the TRIX indicator here and here are still in force. The present day looks similar to these periods where gains in the stock market followed. Now we're looking at Williams percent R on the same weekly risk-on, risk-off chart. Tends to be good when Williams percent R can be above the negative 20 line. Stocks did well. Above negative 20 line, stocks did well. As of Thursday's close, we're well above negative 20, which leans bullish. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.